Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to Accountant's Minute. Your client should be included in the planning process. This was a comment made by Paul Barnaby, the Regional Integration Consultant, Asia Pacific for PlanGuru, and CEO of Beyond Accounting Technologies, and a Fellow of the Institute of Chartered Accountants, during the Black Friday webinar comments within session 4, as we were reviewing the material that ESS BIZTOOLS has produced relative to the preparation of business plans and Predictive Accounting, which is a joint venture that ESS BIZTOOLS has with PlanGuru, the American company that has developed this fantastic software to enable the 3-in-1 financial projections into the future. And Paul Barnaby, in his role as CEO of Beyond Accounting Technologies, who is undertaking the training process necessary for people to utilize the predictive accounting process. Barnaby said, too many accountants don't involve their client in the planning process, which commences with the business plan and proceeds through to the predictive accounting reports of budgets, cash flow forecasts, and projected balance sheets, without effective communication with their client. Paul went on to explain that predictive accounting is documenting for future accounting periods what we have been doing in the historical past. But software tools are now available to enable the preparation of 3-in-1 financial forecasts, which enable the future financial position of the business to be clearly documented. This has been a great process that has come for accountants, because in the old days, preparing budgets and cash flow forecasts was very difficult, and not many of us really tried to produce projected balance sheets. Now the software is available that's been developed by PlanGuru that enables this whole process, which is driven by the information that's placed into the key drivers at the very beginning of the process, to enable the budgets, the cash flow forecasts, and the projected balance sheets to be prepared in one process. And what it enables you to do is to be able to show the client at every stage of that journey what all this means. I think it all starts with the accountant. If you accept appointment to undertake the preparation of a business plan and the financial forecasts, you should be saying to your client that you want a leadership team meeting, a think tank meeting. You prepare the agenda. It's got to obviously prepare a SWOT analysis, strengths, weaknesses, opportunities, and threats. And then it needs to examine the key components of the business, the customers, the suppliers, the team, training, professional development, marketing, selling, social media, website development, the premises, plant and equipment, research and development of intellectual property. They're just some of the items. There's about 40 of them at least for most businesses. And have the leadership team debate those various items. Now, in some cases, this process might take a couple of days. In some processes, you might find the client doesn't want to be holding these meetings for more than a few hours at a time because they've got other responsibilities. And they might be getting a bit jittery, wondering what's going on outside. So perhaps you have to do it in a few sessions. But the important process is that the leadership team is identifying the key issues. I see your role as the accountant as I've always seen my role. and I've prepared hundreds of these business plans, is to be the scribe, to write it down, to put it into proper words and processes. And then to take it back to the leadership team and say, we now review what we've got. Because at the end of the day, it is their business plan, not yours. You're getting paid to do it. And unfortunately, I've noticed that there's been some people who have accepted a business plan appointment and they've gone off and written a business plan and gone back 3 or 4 weeks later to the client and said, there's your business plan. Clients had no input, really, no idea how it's been put together. And in lots of ways, it's only been prepared because the bank manager wants it, or some government agency wants it, because the client's applying for an application. That's not the way to prepare an effective business plan. And this is the system that ESS BIZTOOLS has implemented, guiding you that I think our process is the right way to go about it. You should be involving the client in every step, getting their input, because as I've just said, it is their strategies, it is their plan to implement. You can be involved later on by suggesting in the process that there be at least an annual review of this whole process, preferably, I think, quarterly review. How's it all going? And then doing an update on an annual basis. But this can be exciting work. But we've only now finished stage 1. We've got a business plan. The next challenge then is to prepare the future financial forecasts, which we're now calling predictive accounting. First of all, the key drivers. And that's looking at, well, what's the team going to look like going into the future? What's the cost of operating in the factory going to look like? Electricity, gas, whatever else that might be used to drive the machinery. What maintenance costs are going to be incurred? What is the investment in inventory going to be? How's the products going to be sold? All this can be covered in various components of the key drivers. And what that facilitates is if you want to change the labour manning or change the build-up of stock, so you're going to hold 6 weeks stock instead of 7 weeks, or you need to hold 10 weeks instead of 7, it's easily to manipulate, and it's then directly linked by the PlanGuru software back into the budgets and cash flow forecasts and projected balance sheets. You put an entry in, put it in, and it's there. It's great. A lot better than the old days, I can assure you. But the key is that the financial forecasts, the budgets, the cash flows, the projected balance sheets, should all be linked back to the business plan. For 11 years, I was a consultant for Oz Industry on the COMET program, Commercialising Emerging Technology. It was a great experience, but there were some downsides, because at times I found that a consultant had prepared a business plan, yet the client had asked for someone completely separate to do the budgets or cash flow forecasts. Or the preparer of the business plan said, well, we don't do budgets and cash flows, so someone else got involved. And a couple of times I read the business plan document, and I also read the budgets and cash flow document, and there was no connection. There was no similarity at all, other than the name of who the client was on top of the document, because two separate consultants had gone off and done their own thing. And when I talked to the person that had done the budgets and cash flow forecasts, I said to him, your brief was to link this to the business plan. Why haven't you? He said, I don't think the business plan's right. And I said, hang on, that's not your decision. Your role was to develop the budgets and cash flow forecasts linked to the business plan. This client needs to raise capital. They're going to present these documents, and both of these consultants knew this. they're going to present these documents to potential investors. They've got to be in sync. They've got to link to one another. So if you're caught up in that quandary where you've been asked to do the budgets and cash flows, but someone else, another firm's done the business plan, and you don't agree with it, you need to make sure there is a meeting with the client and get it thrashed out. Because I firmly believe that what's shown in the business plan has got to be reflected in the budgets and cash flows and projected balance sheets that we can now get with the PlanGuru software. So that was an interesting overview, because Paul and I talked about this as we looked at the 5 product packages that ESS BIZTOOLS was showcasing in this particular 40-minute webinar. The obligation to make sure that the financial forecasts reflect what's in the business plan. Very important. The other information we looked at was the tradie chargeout rate calculator, which I think is a great tool, and many of our subscribers swear by it. And I assume that those of you who are watching this video have got quite a number of tradie clients. How do they work out their chargeout rates? Have they taken into account the productivity of individual team members? Have they built into the chargeout rates the targeted profit they'd like to earn? Are you monitoring their performance during the year by having some quarterly business review meetings, or preferably monthly business review meetings, to see if they're on target and making some fine tuning? That's a great role you can perform for your tradie clients, and very similar to professional service firms. And we also have a product package to help retailers and wholesalers, because they've got a real problem. They've got various types of stock. They've always got star stocks, or they should have, which are reasonably high volume sales lines with good markups. But unfortunately, there's not many businesses that can have 100% of their sales on those star items. They then have cash cows, which tend also to be high volume sales, but fairly poor markups, because they're very common products. But a lot of businesses believe they need them because they get the customers in. It might be newspapers, milk, bread, and there's plenty of others. People go there. The trick then is to make sure that you can get those customers to move around the premises and buy some of those star items, because they've got good markups. But the other problems retailers and wholesalers have, they all end up with problem stocks, no matter how good they plan it. Why? They're caught with last year's fashions. It might be a ladies' store, which last year the in colour was red, and every lady wanted something red. But this year it's yellow. It's very hard to sell a red dress when everyone else has adopted a new colour, yellow. So what do you do with it? It would have been a star stock, but you won't get the same markup. I believe the quicker you can get your client to get rid of that, to sell it, and get some money back for it, the better, because it might sit there for 3 years or 4 years before red comes back into play as a major colour in the. And then you've got the real problem areas, stock that no one owns up that they bought. I found in my consulting experience, one of the real problems can be automatic computer reordering systems, because I don't know if you know, but a lot of the computer systems are set that when the stock gets down to a certain level, it might only be that 6 or 7% of what the targeted stock is still on hand, the system automatically reorders. And sometimes you can find that a stock that the manager is trying to get rid of. And I know of an instance, because I was there when the outburst occurred, where a manager in a jewelry business, manager within a chain, but in his store, he
or someone had ordered a particular product that took them years to sell because no one wanted to buy them, but they were fairly expensive items. And apparently he actually bought some champagne and they had a celebration when they sold the last of that stock. And then he turned up at the company's office to get some orders one day and saw that he had all this similar stock there. And he inquired what had happened. And no one had actually ordered it. The system had reordered it. So you need to keep an eye on that. So they had this great quantity of stock that they knew was going to be very difficult to sell. That's a real bad stock purchase. What do you do with it? That was the debate that day, and there was some fiery language flowing around. So that gives you some idea of the practical working environment that you're going to get involved in the delivery of business advisory services. I hope you think and acknowledge that this is interesting and challenging work. And sure, there will be a few laughs and there'll be a few words said at times when things don't quite work out. But it's a bit different to preparing annual accounts and income tax returns because you're at the coalface with your clients, helping them. In the material on our website, which I'd invite you to go to, www.esstoolscom.au, you can see the full webinar recording that we made on Black Friday. Paul Barnaby and myself, where we discuss these types of issues. And you can look at the product packages that are within ESS BIZTOOLS. There's 32 of them. You don't have to subscribe for them all. If you subscribe for the advanced package, you get them all. But we also have the starter package, which is 17 product packages. And it's a great starter kit because our discounted price, 50% discount for Black Friday, is $999. And the discounted package for the advanced package is $3,250. That's a 50% discount. Those prices are the upfront for 12 months discount price. And both figures include GST. Now we're continuing this special offer to the 13th of December, Monday the 13th of December. So you can subscribe to them at any time up until that date. If you've got any questions on any aspect of the products or services that ESS BIZTOOLS provide, please send me an email, peter@esstoolscom.au. I hope if you've got a vision to be offering diversified services to your clients, that you'll have a good look at what ESS BIZTOOLS and ESS BizGrants has available for you. I look forward to hearing from you or welcoming you and your colleagues in your firms as a subscriber to ESS BIZTOOLS. Stay safe and have a great day. Goodbye.